Good morning, everyone, and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin, and I am here with my father, Carl Swenlin. And we're going to go through the market, let you know what's going on, look at the charts we think you need to look at. And then we're going to get into a sector review, and then we will be taking your symbol requests to finish the program. So Q&A box is where you're going to put your symbol requests. The chat room is open for you to talk amongst yourselves. There's usually a pretty nice community in there. Just make sure that when you're in there and you want to send a comment to the chat room that you use the drop-down menu and select to send it to everyone. Otherwise, it just goes to Carl and I, and we don't really pay attention to what is going on in the chat room. All right, I think that's all of that we need to do. So I'm going to pass it to you, Dad. What's going on in the market, or what did you want to talk about?
Okay, first of all, we talked about getting the list of components in the sector, the real estate sector, XLRE, and the easiest way I found was just to go do a web search on XLRE, and you'll be able to find a list pretty quickly. I scanned it quickly myself, and there are plenty of REITs in there, but there are lenders and other real estate related companies. So it's not strictly a REIT index. Along the line of REITs, this symbol came up, and I don't remember where, but I just thought I would take a look at it. And first of all, we've got a dividend that's $6.16 a year, and then EPS is 207. That's not a good. That's the reverse of what it should be. So PE is very high. Looking at this chart, it's not looking too healthy. But let's zoom out and look at the weekly. Big rounded top, I guess we'll call it. We could even say it's a head and shoulders, I suppose. And it looks kind of like it's executing. Just going out to the monthly chart. So it's hit its high in 2021, and it's been going down ever since. Doesn't look like a good place to put your money at this time. One other one, uranium, that came up somewhere. So we got to look at the uranium ETF. Let's go back to the daily. Okay, that's looking good. Notice we've got a parabolic advance on the daily chart. So parabolics beg for correction. You get too vertical, and they need to pull back and get a little closer to the rising trend line. That has started on uranium, obviously, the last two trading days. And if we zoom out, let's see what kind of shape we're in. Okay. This is, we're going to run into resistance in this area. I would look for a pullback to about 24. And let's look at the monthly chart. Okay, it's been way up there. We're a long way from this exuberance over here. But I'd say with energy excitement, uranium's going to be in demand. All right, I'm going to get rid of that, and let us look at the market. It's been all over the place today. Right now it's down, and notice we've got a falling trend, and now an even steeper falling trend, and could possibly bounce up to this declining tops line. The weekly doesn't look good. We've got a PMO that's in decline below the signal line, and a top beneath the top. So longer term, we could possibly have a falling trend in that area there. Let's go to look at a monthly chart. This is also not looking good. We have a PMO, monthly PMO top below the signal line. And here's the rising trend line, which at this point is correcting back to. Looking at the bias of the S&P 500, we have charts on it like this on another 25 sector and market indexes. The two primary indicators here are Silver Cross Index, which is the percentage of stocks in the index that are below, as the 20 below the 50 EMA. This it's at 28 right now. That's bear market territory. Notice it gets oversold, it can bounce up. In the Golden Cross Index, it's percentage of stocks in the S&P 500 with a 50 EMA below the 200 EMA. That's a long-term indicator, and it's at 55, so it's still not dipped below the bear market line. We also keep track of the stocks above the 20, 50, and 200 EMA, and we can determine from that where these might be headed, where these two might be headed. So the stocks above the 50 is at 19. So I would say that is where this Silver Cross Index is headed lower, probably to 19. And then the stocks above the 200 EMA is at 39%, and that would be where the Golden Cross is headed at this time. If we get a shift in momentum in the market, that can change. But right now, that is where the market, it's just a matter of time before it gets down lower. A SPY with our two primary indicators, this Swenlin trading oscillator for breadth and volume, and there's a short-term oscillator. And notice this is as of Friday. It's an end of day indicator, and it has been rising. It's also got down to the bull market oversold level. Notice the bull market started right around here, and so with price rising, we would expect that the indicators won't dip as low as they did during the bear markets. You notice that here's the end of the bear market showing here, and it was quite a bit lower than these indicator readings right here. We have, they're basically confirming what price is doing. All right, let's move along to the dollar. It's been rallying since July, and it's really taken a toll on gold. Right now, it's higher by 71.71%, I should say. And here's gold. It's down by 0.92%. So gold is weaker than it ought to be. It ought to be, with everything being equal, it should be down as much as the dollar is up percentage-wise. And here we have our relative strength indicator that shows us that gold has been weak since middle of July, and it's getting weaker. Let me zoom out on that. Look at the weekly. Okay, breaking down, this is where the next support would appear to be, and still within limits, and thinking this might be a final washout. That's being very optimistic. The monthly chart, I'd still say we're looking pretty decent. For crude oil, it's rallying since middle of June and taking a little pullback here. When it gets ahead of this rising trend line, you can expect that it'll pull back and kind of correct a little bit. On the longer term, let's look at, let me go to the weekly. Okay, here's the low in the mid 2020, and we have a rising trend line here, potentially going higher. And just how much higher? Let's just look at the month. I'm sorry, that's the wrong weekly. I went to monthly. Okay, the monthly is, well, there's a lot there to go higher in terms of that. This is not the one I wanted. I need to get back. Okay, I wanted to look at West Texas Intermediate Crude chart. Notice that back in 2022, it was up over 120. I think that's almost 130. So I think we're probably heading in that direction, which would, of course, get USO headed that direction as well. Bitcoin, this is obviously a good area of support. And you've got top here and bottoms here. Here's the potential upside right now, and it is hitting resistance. Treasuries in a downtrend, not looking good at all. Notice we broke down through this line of support, and now we're noodling with another one. Let me just get out to the weekly. Okay, I don't see any more support close in here. So going lower. We're looking at yields. We're going up, rising trend, still intact on the longer durations, and the shorter durations, we're inverted right now, are higher. But they're flattening out. It's getting a little more difficult for them to rise. Nevertheless, here's 10-year, and it's still in a nice rising trend. Here is the Magnificent Seven plus Tesla. They are, let's see what I noticed. Yeah. Okay, Apple's having a good day, but notice it's not having a good couple of months. We're just coming off of a low, could rise to this rising trend line. Here's a line of resistance, which I haven't drawn in, but it's right across those tops. It could hit resistance. Obviously, it's just an oversold bounce at this point. Amazon having a good day, but it has a dark cross with a 20 dropping below the 50. Alphabet coming off a top and rallying back. Having a good day. It's funny. I'm looking at the Nasdaq, and it's been doing better than the S&P and the Dow. So that's these guys. Meta having a good day. Microsoft doing pretty good, but it is in a falling trend. We've got a bottom beneath the bottom. Basically, actually, if I draw a line across here, we're going to have a falling wedge, which calls for a breakout above that declining tops line. Netflix, also on a declining trend, catching itself on this rising, long-term rising trend line there. The NVIDIA up 3%, just bouncing off a long-term trend line. And then Tesla um, bouncing, didn't quite make it to this trend line in the 200 EMA. We have the first question on the list is about Apple, so it knows a good time to buy. Short term, I'd say yes, but watch your stops. There is a potential. This is really more of a channel than a falling wedge, I think. But it could rally up to the declining tops line, and of course, this line of resistance is another place it might stop. And with that, I think, unless I've forgotten something, I can turn it over to you, Erin.
I don't think you forgot anything, so we're in good shape. All right. Let me go ahead and grab the screen. All right. There we go. Before I get too far into here, I do need to give you my little ad. Cue the music. Dun, 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 dun. Okay, so this is our website, DecisionPoint.com. We have two publications, the Decision Point Alert and Decision Point Diamonds. We're getting ready to launch a new scan alert service, which we'll tell you more about when we get closer. Decision Point Alert gives you the complete market assessment of the market and Bitcoin. All of what we did this morning, Carl talked about pretty much is going to be in the Decision Point Alert. Decision Point Diamonds are going to be your stock picks, stocks and ETFs. I do 10 per week, including 3 ETFs. So if you're an ETF person, you can still get Decision Point Diamonds. You're going to get 3 of those picks per week. That is my commercial. So let's go ahead and move on.
Let me take it back up. I did forget something.
Yes.
Let me take it back.
Oh, you were going to show the table, right?
Was. Okay. Which one do you see?
The trend model.
Okay. This is our intermediate term and long-term trend model. This is basically the intermediate term is when the 20 EMA drops below the 50 EMA. If it happens above the 200 EMA, then it's a neutral signal. If it happens below the 200 EMA, it's the sell signal. But as you can see, there's nothing bright except for communications and energy right now. And energy is not having such a great day, I think. Mm-hmm. Long term, that's still looking pretty healthy. So there's still a chance that this will turn around. But we've got the major indexes here, and then we have the sectors taken, the 11 sectors from the S&P 500. They are doing well long term too, but then that's because the S&P 500 is doing well. So that's not really surprising. When you look at the industry group down here, we've got 4 out of the 6 are on a sell signal. Now let me do a new share. And this is our bias assessment. This tells us on the Silver Cross whether the this tells us whether the Silver Cross index is above its 10 EMA. All of these indexes we track have a bearish bias with the 20 with the
Silver Cross being below the 10-day.
Yes, thank you. And the Golden Cross, that's the Golden Cross index is below its 20 EMA, and then they're not looking great either. That's a bearish bias. So we got energy and materials still doing okay in that area. And now I will send it back to you.
We did get a question. I think you and I have talked about it a little bit, maybe. I had somebody ask me, so what do I do? I don't understand the difference between the tables. One will say a buy, and then the other one says it's a bearish bias. If vice versa. How do I parse that together and piece that together? And
Okay. We're looking at two different things. Let me take it back. And okay, here we have the Golden Cross and Silver Cross index for the S&P 500. The bias chart tells us when when the Silver Cross is below its 10 EMA, and when the Golden Cross is below its 20. Now, two different things. The signal chart with the buy and sell signals tells us whether the price index 20 EMA is below the 50 EMA, and in the long term, whether the 50 is below the 200. So this is the bias. It tells us which way is the market headed internally, right? It's in it's a negative bias in the intermediate and the long term, because there are stocks continuously flipping over to the bearish bias side. Okay.
sounds good. Before you let go, you let go of the screen. Somebody asked specifically if you could cover UNG and whether it'll ever be a buy signal on that. Is there any hope, I think is what they said on nat
I
gas.
don't know if I will be alive to celebrate.
It's starting to feel that way.
Let me get a. Right now, the 10 is below the 50 EMA, so right now it's not looking too red hot. Let me just flip over to the. The weekly. It's got a rising PMO, but that's really because the price is flattened out on the weekly time frame, and it's starting to slow down on its advance. So right now, there's certainly not a good look, and I still need to find that other chart that I'm looking for. Daily bars. 6 month. That's what I was looking for. Okay. I was nursing this bucket here, the saucer, and looking for possibly a handle. I don't think this has got any hope for it at this point. Right now, we're just looking at a trading range. Let me go to the 1 year range. So it's got lower to go to get to the all-time low back here in June. And it's just not doing much. But so, no, I'm not looking. It's certainly not a buy at this point.
All right.
That's my answer there.
Okay. Let's see. I will grab the screen. I'm just going to go ahead. I know kind of where I want to concentrate here today, so we'll get right on into it. But I wanted to give you first the look of all of the sectors on one page. This is price. Obviously, this is my price momentum oscillator. I should say our price momentum oscillator, and the StockCharts technical rank. So what I'm looking for primarily is the PMO to be rising. And that is not the case for any of the sectors except for technology, which is having a pretty good day. And it does appear that we're starting to see that PMO starting to turn up. So if there's any area in the market that we would look toward to continue this rally, it would have to be the energy sector, at least based on momentum. So let's go ahead and dive into that sector in particular. All right. Apologize for the white space, but we use these in our DecisionPoint alert, and not all the time, but we do use them there, and we need to have them set up to go into our blogs because it's hard to try and maintain two sets of charts. So I apologize if it's an eye test for you. All right. So, I mean, price isn't doing, I mean, we have the lower low, we have a lower high. We're in a declining trend. I don't think that that's a wedge. Maybe that is a wedge. Let's just take a peek. I'm going to make that a little bigger. Yeah, it is a little bit of a falling wedge here, but barely. I think you could pretty much call it a declining trend channel. So there isn't, I mean, we probably are going to see a rally here for a little bit longer. And, you know, we got very extended to the downside, and it appears technology, which tends to be the leader with where the market's going to go, it's suggesting we could see a little bit more rally. And if we're going to look for more rally, this is the sector that we need to look at. I went and looked at all of the sectors on Friday and checked to see how many stocks were above 20, 50, and 200-day EMAs, and see if we were getting any kind of an expansion. Technology was the only one where I saw at least the declining trends starting to be challenged, I would say. We've got the declining trend is about broken here on the stocks above their 20-day EMA. Silver Cross Index is flattened out. So if we're going to look for somewhere to possibly take advantage of whatever rally we're going to get out of this, this is probably going to be the area to go. We happen to have
OBV on that, Erin.
Yes.
We've got a reverse divergence between the beginning of September top and then the most recent top. So we've got lower tops up there. We've got a higher top on the OBV. So that's a reverse divergence, and it's telling us that the volume is high, but it's not pushing price up.
Right. So there are internal problems that you have to consider. All right. So the area within technology that we happen to have under the hood charts for, or under the hood indicators, are semiconductors. And looking at this chart, I've determined, in my opinion anyway, it's my opinion, is that semiconductors, I think, are the ones that are leading this, because you can see that percent stocks above their 20-day EMA looks really similar to the sector in general. That's where we're starting to see some expansion here in the very short term. We're not getting the best expansion of stocks above their 50. There are a bit of problems here. We've got that reverse divergence kind of setting up here as well. Although I do notice declining bottoms, rising bottoms on the OBV, so kind of mixed messages going on there. Let's see, what else can I say to you about semiconductors? I think, you know, stochastic's rising, and you can see the relative strength improving here. So this does seem to be an area of interest that you might want to consider in technology. But I would say across the board that we need to keep our stops in play and honor them. We need to be aware that every position in our portfolio should probably be managed in the short term. This would be a very short-term move, something for a more nimble trader to take advantage of, because I don't know how long this is going to last. We'll have to see if we continue to get a nice expansion on this chart and, you know, offering semiconductors even more opportunity to break out. But right now they're below the 20 and 50-day EMAs. There's still some resistance to deal with. PMO has started to turn up, but we don't have that buy signal just yet.
OBV problem again.
OBV problem again, as far as reverse divergence. The idea is, you know, if you're getting the OBV moving higher, making new highs, price should be doing the same thing, because as we know, price should follow volume. And if price isn't following volume, it's telling you something, that there's either a problem or there's something good going on. And in this case, there's a problem with that. All right, I think we'll go ahead and jump right in. It's 9:30. Rather than go through too many industry groups, I think we should spend some time doing our Symbol requests, looks like we have quite a few. I think we can get through them, but if you wanted to add a few, if I have more time, we'll see if we can't get to them. Just put those in the Q&A box.
Good deal. Okay, DCGO.
All right. Okay, so this is DocGo, DCGO. And as you can see, we have a nice rising trend going on here. Don't confuse this with a support level right here, this blue line. This is just the average. I think this one's a 50-day moving average. Yeah, 50-day moving average of volume. So don't think of that as a support level. We don't have a support level here, except for this recent low. For me, when I look at this chart, the first thing I want to do is go to a weekly chart, because I need to know where price is in terms of support and resistance. So this is a pretty interesting bounce coming off of this support level. But notice that PMO, the weekly PMO, looking pretty ugly, obviously, from this deep, dastardly decline. Trying to take advantage of a decline like this, I think, is risky business, especially what we're seeing right now. We're in a market where you really need to be getting involved in stocks that are showing EMAs that are configured properly. Where reversal candidates right now are going to be really hard to find. If you recall, we only have about, what did we figure, 20% of stocks, I think less than that, with price above their 20-day EMAs. There's really very few selections out there where the 20 is above the 50. But we need to try and find those, because with the market weak like this, if you've already got these EMAs structured this way, you're going to likely see some problems. So while I can see this as a nice little bottom that you could possibly take advantage of, I would just be careful, because in the bigger picture, there are some problems right here. Stochastics are rising, but they're in negative territory. We are seeing, performance about in line with the S&P. That's something that I would want to be improved as well, because if the market is kind of weak, right now it's rallying a bit, so we're in good shape, but not for very long, in my opinion. So we really need to be finding those stocks that are outperforming the S&P, not just traveling in line with it. So I think there are a couple problems on this chart. I would be very careful. This certainly does look like a constructive bottom on this one. Just be really careful here. And setting a stop will be really tricky. Let's see here. If we go just below this support level, that is about 10%. So you're really looking at a high risk play. This is not my style of investment. I would just say be careful here.
BELL.
All right. Bad day today. And I'm not sure whether you're looking at this for a hold or if you're looking at this as a long. As far as a long, I think that there's more downside to be had here. Look at the PMO. Lower high on the PMO, kind of confirming what's going on up here. Stochastics have turned down in negative territory. It's not been outperforming the S&P, so that's a big problem for me. This is not a buy candidate. If you owned it, I would really be hovering over that sell button. You don't have a whole lot of area of support here. You're already sitting on it. You would need at least a 5%, I would say, stop level on this one. And I don't know if you want to suck up 5% more in a loss, when if you had it just right here to where it is now, you've lost about 10% plus. So I'm not a fan of this one. Maybe on the short side, I think you could maybe look at this one, but I would not be on the long side for this one. We can look at a weekly chart really quickly, and you can see that weekly PMO turning down. I need to start using this one. It fills up the screen. So there's your weekly PMO on a new crossover sell signal. So I think I would be avoiding this one.
AWK.
All right. Ooh, boy, some of these charts not looking so hot here. This normally I would look at this and I'd say short candidate, but the one problem with it is the decline has been going on for so long. I don't know if you can count on it to go, not to this degree more than likely. We have to go to a weekly chart on this because we don't even have any support right now to look at. But look at the relative strength here is just dying against the S&P. It's doing not so great against the group itself. Stochastics are below 20. There are a lot of problems. And weekly chart. All right, so this is the support level right in here. These two lows, 1 and 2, and this low, and we're below both of those. So shorting candidate, not a bad idea at this point. Look at the weekly PMO, it just looks terrible. I would be looking at this as a short. I would not be looking at this as a long. And if I owned it, I'd probably be, if I hadn't sold it already, I'd be selling it now.
Okay, let me take this next one.
All right.
Should I continue holding my losing position in long-term government bonds? We've shown this chart a lot. Long-term bonds are not going to do well in the long term, and they're currently doing lousy in the intermediate and short term. I was wondering, we had some hope that there would be support at this level, but that's blown out. Bonds rose for 40 years, and now they've broken that trend line, and they're going to go down for quite a number of years. If you can see a bounce in here someplace, that would be a way to get out. But I don't see any good future for bonds. And I'll turn it. You can take it back.
That is. I was wondering if you were going to grab the screen and show your favorite chart.
That's
that is one of them. Okay, so now where are we at?
Pipeline industry. I think you got to go to your industry group.
Yes, I do. Industry summary. Pipelines, eh? Now, I was reading today, and I have to say, I agree that crude oil prices are likely to continue higher. We're just in a pause or a break in the action for now. It's gotten extended, as with most stocks and ETFs. If you get extended, it has to, it'll revert in the other direction for a little while. That's what's going on with crude oil. But most of the information I'm reading is that production is such that we should expect crude oil prices to continue rising. So that will do some goodness for the energy sector. But right now, crude oil has paused and is pulling back, and it's giving these stocks a pretty good opportunity to pull back themselves. I don't like the way this is broken below this level of support right here. It's a pretty strong level. The 200-day EMA is also being broken. But ultimately, in the longer term, I still am feeling pretty good about energy. Pipelines are part of energy. But right now, it's really starting to look weak here. That PMO is below its zero line. Not a lot here to get excited about. The next level of support, that's what would really interest me. There's a little bit of support right here at these tops, and this is kind of a support zone. So we can hang our hats that maybe we're going to get the reversal in this zone. But if not, we do have kind of a long way to go down, another 6% or so to get us to this level of support down here. I think it's really vulnerable over the next week or two to more downside. But ultimately, I think when crude oil turns up, pipelines will probably do better. But if I could overlay the USO price on here, I'm not going to do it right now. But if I did, USO has been traveling this way. And pipelines, even though USO is traveling this way, have really flattened out. So of the areas in energy, this is probably one of the weaker ones to get involved with, even with crude oil rising. And that's because, like I said, crude oil's been rising and it didn't do anything for pipelines.
Well, what's it look like on a weekly or monthly?
Weekly, we are starting to see that PMO. It looks like it might. Is it surging? No, it's still looking pretty ugly here.
Right.
And on the monthly chart, just to take a peek, its PMO is top beneath the signal line. So there are a lot of bearish factors right now, even in the intermediate and long term for pipelines. So I would be very careful with that area. I think you'd probably be better off in integrated oil and gas, but that's just off the cuff.
SDOW.
Yes.
Should he be long?
SDOW is the short for the Dow 30. And you can see it's certainly in a nice bullish configuration. Nasdaq and technology, as we looked at earlier, are the ones showing the relative strength, and industrials, not so much. And honestly, I'm going to let's move over to the industrials chart, because if we're going to short this area, we might want to just look at what's going on in the index itself intrinsically. You can see this rounded top. It doesn't look like it's bouncing at this point. It's lost the 200-day EMA. So there are a lot of things here. The PMO is in decline. No improvement in participation under the surface, even with the couple of days of rally that we saw. Stochastics are topping below 20. I think you're going to be fine with your SDOW position for a bit longer. We are looking at a possible rally over the next few days. We did see those magnificent 7 stocks not looking so bad, and that will probably keep things running in the Nasdaq. But industrials doesn't appear that we have the kind of internal strength that we need to continue to rise. So SDOW looks pretty good.
This is really strange. The Dow is currently down 230 points, with the SDOW is down as well. So
yeah, that's interesting. I'm not sure how they track. Well, I'm showing it up to 11.
Okay, you must have had, okay, that wasn't updated, the chart.
There we go.
Okay.
This is an ultra short. So if you do get involved in this hedge, just recognize that you're going to get 2 times coverage on the short side. So it is for hedging. It's not for padding your portfolio as an intermediate term investment or anything like that. This should be in your portfolio. You should constantly have your finger on the pulse and be ready to dump this when the market starts to look a little bit healthier. But right now, Dow looks pretty unhealthy. I think you're going to be okay with SDOW for a bit longer.
AGCO.
All right. Had a terrible Friday with a big bearish engulfing candlestick, and we are getting the follow through on that candlestick pattern, which is a down day. PMO is flattening. Wow. I don't really like this chart very much. The RSI is negative. Stochastics are rising, but they are below net neutral 50. Starting to see a little outperformance, but nothing that impressive. I'm not really thrilled with this. And when we talk about reverse divergences, I'd say we have a pretty serious one going on here. We've got the OBV matching prior highs here, but look at where price was when the OBV was at this level, and it's well below that. So price is not following volume. So there are a lot of problems here. I don't like this stock. And I don't know that they were looking. It's helpful if you put in when you do your symbol requests, if you're looking at it on the long side or the short side. I could see this as a possible short, particularly if that PMO does turn down.
Okay, BTI.
All right, British American Tobacco, BTI. Somebody had noted that it is kind of hard to see these symbols, and I do apologize for that. I need to start talking about what the symbol is a little bit more. So BTI, breaking down below some support here today. This is the actual support level down here. So it still hasn't broken strong support, if you will, although we'll have to look at a weekly chart and make sure that's the case. But PMO now below the zero line and falling. Relative strength is pretty terrible. Stochastics started to move up, but are flattening out already below 20. Don't like the look of this. I think that it is kind of in the shorting arena. PMO, let's see, I want to get my other weekly chart up here. So weekly PMO is on the way to a crossover sell signal. This is the line in the sand of support level right here. It could go much further down to this level of support, which is about another 6.5% to the downside. So I think there's some potential on a short here, but I really don't like it on the long side.
Okay, why is UNG down with Putin constraining supply in Europe? I don't know the answer to that. It seems linear thinking would demand that price should be going up with the shortages in Europe, but it's not.
Right.
May have something to do with our administration's war on traditional energy.
Right. That's a good point with UNG. I'm just surprised it stayed at this level for so long. It's just a really unusual look on UNG. You know, you look at the monthly chart, and I can't believe we actually were trading UNG at these levels.
Yeah.
It's really shocking.
VTRS.
Okay. VTRS, Viatris. Big filled black candlestick. So while it did have a really great morning, it's pulling back from the open. So that is a negative or bearish candlestick that is in the process of forming here. I think it was just a little too much too fast. And so that's why it's starting to pull back here towards support at the 50 and 200-day EMAs. Filled black candlestick does imply that you're going to get a down day the following day. But I have to say, I really like the way this chart is shaping up other than that filled black candlestick. And honestly, that's a one-day pattern. So we don't have to put too much emphasis on it. But RSI just making it into positive territory, PMO almost on the crossover buy signal, stochastics rising. Look at the relative strength is improving. This is my kind of chart. I don't know who requested it, but they may be a diamond subscriber because they're following all of my diamond rules. So I do like this one. We'll look at the weekly, and then we're going to pop into a 5-minute candlestick chart for trading. Here is the weekly for VTRS. And not the best look on the weekly chart. We do see that the scooter StockCharts technical rank has moved above 70. I call the area above 70 the hot zone. Typically, when you're in that zone, you've got really great internal strength in the intermediate and long terms. So this is a good sign, but the PMO is definitely not looking so hot right now in the weekly. But I do like the daily chart. So in the short-term time frame, I think you could make a case for getting into this one. Sell points are when the 5-minute PMO turns over. So your sell point was up in here. The buy points are where you get a positive PMO crossover with a positive RSI. So that occurred right here on this bar, it looks like, maybe on that one right there. So our last buy point was at about $10.14. We're currently at $10.18. Does look like it's going to come back toward that $10.14 level. And as long as that PMO starts to flatten or turn up at that level, it would probably be a sufficiently good buy point. But if you have time and you can wait out the chart, you probably will get something even better than the $10.14, just to me, based on this second top of the PMO so far below that first top. So I think there's a good chance you're going to get more pullback on this one.
DXCM.
DX. Dexcom. Medical supplies. All right. Well, we started a nice little rally, had a bad Friday. PMO on the buy signal. RSI is still negative, but it is early in the move. Stochastic's looking a little tentative on their way up to 50. But I do like the way it's performing relatively to the S&P right here. It's performing well against the group, which it better be, since the group is starting to fade in terms of relative strength here for medical supplies. But ultimately, I do like the chart. I would just warn the EMAs are configured quite negatively. So you're kind of starting with a bearish bias here on this particular chart. So you need to be careful with that. If we look at the weekly chart, weekly PMO is falling below 0. So we want to keep this one in the short-term time frame. 5-minute candlestick chart looks like it's going to continue a bit lower here. I think you'll get a better buy point. The sell point came in right about here when the PMO turned down, right on that bar. The buy point was back here at right in there. Last buy point was at 94.13. We are at 93.72. So you can make a case to get in right now. It is below the first buy point. But PMO is still headed lower. Price does look like it's going to head lower. So I think you'll get a better buy point later today.
AI.
C3AI. Okay, EMAs, below the EMAs. 50 is still above the 200, so in the long term, it's still clinging to a bullish bias. PMO is flattened. It was rising. This looks like it hit the rally and, did a little bit of a snapback toward the 20-day EMA, but now it's very vulnerable to moving back down. This is a pretty solid declining trend that it's in right now. It is starting to see some outperformance, but I can't get too excited about this declining trend here for AI. Weekly chart is also bearish, so not liking that. If you're going to the 5-minute candlestick, it looks like you certainly could get a better buy point, but I'm not a fan of this one for a buy.
BAKT.
BAKT. Oh, D.
D, yeah. DAKT.
Let's try DKT.
DAKT.
Yeah, I did that. It didn't work.
Oh, you did? I didn't.
KT. Oh, there it is. Okay. I think autocorrect got me on that one. Let's see. Well, kind of a flaggish formation here, and the EMAs are at least configured properly with the fastest on the top, so that's a good sign. PMO is in decline here, which is a bit of a problem. I don't like to get into stocks where the PMO is declining. I mean, why? Why get into a stock where there's negative momentum? There are plenty of stocks with positive momentum. I don't need to force that square peg into a round hole. Our relative strength not doing a whole lot. I can't say that I like much on this chart. And I bet the weekly chart, let's see, the weekly chart's okay, but the PMO is looking a little toppy here. It has sort of been topping out here. Price is still looking pretty good though on the upside. So you can't fault it for that. And it's certainly got a nice scooter value. I don't know. I think that this might not be a bad area. It's in technology, which is showing a little bit of relative strength right now. But I have a feeling you could find a better stock than this. I'm thinking it's a low price stock. So you're looking to make a quick buck here, because if it can get back to this level, it's a 14% gain. But your downside is pretty. Here's your support level, and that's, well, it's not bad. It's 5.6%. So you could set that stop right around there, and that would work pretty well. Okay,
we've got 2 minutes left, less than 2 minutes, actually.
Right, good thing, because my dogs are starting to go crazy. I can hear them in the background. All right. UNH.
Yeah.
Okay, well, kind of a flag. Not really. I'd say a flag, if you get the decline on that flag, that makes it more apt to be a good bull flag. Right now, it's kind of moving sideways. So it looks more like it's just a strong rally with some consolidation, not really pulling back to any degree here. PMO is doing what it should, but it has been on that buy signal for quite a while. So we have to wonder if the move is about finished. If you owned it, I don't see any reason to get rid of it. Everything's going well. I just think adding it right now, it might be a little late. You've hit this area of overhead resistance, which is probably why it started to settle in here a little bit more. It doesn't look bad. I mean, you've got some nice outperformance going on relative strength-wise, stochastics above 80. I guess I would say I'm lukewarm on this one. Weekly chart. Weekly looks good, but I'm not really liking the price pattern here. I mean, it's just basically been in a trading range, and it's near the top of that range right now. So I think you're adding a lot of risk in here. But if you were to look for a buy point, sell point came in here. And buy point, we're waiting for that PMO to turn over. But this does look like a pretty good area as a possible entry.
And we're out of time.
All right, everyone. It was great to have you here in our DecisionPoint trading room. If you'd like to join us live and have your symbol requests looked at, if you go to the comments under the YouTube video, you will find the link to register for the trading room. And we hope to see you here live. And with that, we'll wish everybody good luck and good trading.